Let's talk about startups, let's talk about pitch decks, and more specifically, let's talk about investor pitch decks. In case you're new, hello, my name is Anika, and I talk about all things product management, startups, entrepreneurship, tech, and just generally anything that fits that category. In case you're wondering who I am and what on earth I know about startups and investors, a few years ago I had founded my second startup. We were quite early stage, we were pre-product, and through the deck that I'm gonna walk through with you today, we actually managed to raise some venture capital funding for our business before we had a product in market. We were still in the process of developing our product, so we knew what the problem was, we knew the solution we were trying to build, and obviously what the product was that we were trying to build. But we didn't have traction in the form of customers. We were taking part in an accelerator program. We were still trying to establish ourselves, but we were still successful in securing a little bit of funding, which really helped us in those early days. Now, investor pitch decks are very different to startup pitch decks that you might hear about more generally. General pitch decks are meant to be very snappy. They're meant to be, 5 to 10 minutes long. They're meant to only touch on the basics of every part of your business to really pitch the idea to someone. That's the point. They're short and snappy and they're a pitch. Investor pitch decks are really not pitch decks. They're actually often called investor memorandums. And that's because you go into an incredible amount of detail in these slide decks about every part of your business. And you'll see, so the slide deck I'm gonna walk you through today is 30 to 40 slides or something like that. This has been months in the making, a few years ago, and it really puts together anything and everything about our business at that point in time. So in this video, I'm going to do a detailed walkthrough of each and every slide in our investor deck. Got my laptop here, I'm gonna be sharing my screen, so let's get into it. Now, like with any presentation, make sure you have a meaningful cover slide, a title slide. Keep it simple, to the point, and make sure it is clear who this presentation is for. Because with investor decks, you might not always be presenting them. You could actually be emailing these out to people, and you want to make sure it is pretty clear to the reader when you're not there to present it to them what this deck is for. Next, we have a confidentiality and disclaimer slide. This is Legal 101, legal basics. You can Google this and get a template. Basically, this is just to protect yourself. It also makes your deck look quite professional, but make sure you have something like this in to protect yourself, protect your business, and make sure that the document is not distributed or changed in any way without your consent. Next, we have an executive summary. I like to think of an executive summary as a summary of what you're going to tell someone. So rather than them having to read the entire slide deck, if they can read the executive summary, they can get a very good snapshot of who you are, what you do, and what you are looking for. Remember that investors don't always have a lot of time. So if you have 2 minutes of someone's time, what would you want to tell them? Put that in the executive summary. And again, this makes the deck look extremely professional if you do have something like this inside it. Next is the problem. The problem is as simple as it sounds. You want to describe what are the pain points, what is the problem that the people who are going to buy your product or use your product are facing. You want to try and describe the problem in different ways. You want to use metrics like numbers, percentages, you want to use dollar values, and then you also can use trends to indicate how things are going. Like I've indicated churn increasing, I've indicated costs increasing. But then of course you can also use text. Try to be descriptive, because if you describe a problem, that's potentially going to bring out some emotion related to the pain points that a given customer is facing. Now you'll see in my case, I actually have 2 problem slides, and that was very deliberate because we had a product that we were selling to businesses, so we were a B2B business, but that business was then going to provide the product to their end users. So I wanted to make sure we highlight the problem both for the business, but also for the ultimate end user. It kind of shows both sides of the story. Now, the other thing you'll notice I've done on every single slide is I've got a very small, very brief summary relating to that slide. Now, because this is a problem slide, I've got energy consumers face increasing energy prices, little ability to predict or control their spend. And then my brief description on the next one is energy retailers, being the business, struggling to retain customers and competition and are competing on price alone. I'll end by saying that dollars are extremely important because you want to quantify the problem space. At the end of the day, investors care about money. They are in this to try and make some money. And the bigger the problem, the more the opportunity is likely to be. Okay, next we have the solution slide. Now, do not be confused between a solution slide and a product slide, which we will talk about next. So the solution is really, what are you going to do to solve the problem that you just described in the previous slide? Now, a solution doesn't necessarily mean you know exactly what product or service you are going to build. Rather, the solution is the approach you're going to take to try and solve the problem. The way that I like to put a solution down on a pitch deck like this is using a how it works model. So rather than just describing what the solution is, which is in my tagline up here, I've tried to put together a very simple step-by-step flow that someone can read to understand what the solution is. Now, oftentimes, and I'm sure you're familiar with this, you'll hear that someone describes their product as a something platform. And I wanted to avoid just describing ourselves as that. And that's why I wanted to explain, what do we actually do? So I've described that someone would sign up for our product, how they would go through the onboarding experience, how we then retrieve data related to them, how we provide analytics to them, what we do with the analytics and other data that we have, and how we then make some of the insights available to our end users and the business. So I'm trying to explain how the platform works, but leading on from that, we do have a solution slide. As I mentioned, we were actually pre-product. So what I've got here is actually just screenshots from our prototype. And I did mention that there was a demo available, which would have been a demo of an interactive prototype that we had. But I thought it was really important to show some visuals to help people understand how an end user would actually use this and some of the things that they might see on their screen. But the point of this slide is really to provide an overview of only the key capabilities that your product would have. Investors aren't going to care so much about all the little specific features or cool things that your product does. They just want to understand the main things that it will be used for, and most importantly, the value that it's going to provide and how it's going to be different. Now, because we were pre-product, we just used some screenshots, but of course, if you have a real product, you could put in a super small clip of the product as it's being used by someone, or you using it, and just put in a screen recording of how it works. And if you're presenting to someone, of course, you can do an actual demo too. Okay, next you want to talk about how you're different, which is often known as your unique value proposition. And this is extremely important. You want to articulate why customers will use you and your product and not a competing product. What is the thing that's going to make you different so that they want to use you over someone else? And you also want to talk about how you have a unique value prop that will make it difficult for someone else to copy what you are doing. That is often known as your intellectual property, and investors are often very interested in that because you can protect intellectual property and you can prevent other people from simply copying what you are doing. So in our case, we described our unique value proposition as us combining advanced analytics with subtle gamification to provide personalized insights and to drive engagement. And we broke those down into 4 different things that we were doing that made us different. Okay, next is the market opportunity. This is going to be an extremely important slide for investors. Investors, again, want to know, yes, the size of the problem, but even more than that, they want to know what is the size of the opportunity you are creating or you see, because the opportunity is a thing that they can tap into in order to potentially make some money. So we actually have 3 slides relating to opportunity, and I'll explain why. So because we were based in Australia, we broke down our market opportunity first and foremost in terms of the Australian market. This was relevant for us to do for a few different reasons. You certainly don't have to do this, but I think some benefits of doing this is that it shows that you really understand your immediate local market very well. You can see that we're putting a lot of work to try and break down into these specific segments of the market as well. I think the slide did us well because it demonstrated that we had done so much work up front to understand the market, to understand the demographics in that market, and then go as far as to actually then compartmentalize those into different segments. And of course, we were able to put a dollar value on that, which is extremely important. But next, we also broke down the opportunity globally. After we've tapped into the Australian market, where would we go from there? Australia and New Zealand markets, especially New Zealand, are incredibly small. In fact, they're tiny. And you want to make sure that you create some excitement for investors and help them understand how you could scale beyond the market that you are existing in. Next, we talked about the global market opportunity. So after we've tapped into our immediate market, how could we scale the business and how could we tap into other markets around the world? This is what investors will be really interested in, because the bigger the market opportunity, the more markets and countries you can expand into, the greater opportunity exists for everyone to potentially make money. And as a bonus, we also wanted to demonstrate how well we knew our target customer. And so we tried to show that because we have so many different customer segments, we've actually isolated a couple of personas in particular to try and initially target. And again, I think this just showed that we had really done the work to understand the market. This is not something you necessarily have to include, but because we had the data, we wanted to include it anyway. Okay, next we have our go-to-market. This was definitely a bare bones slide for us because, to be honest, we had not done enough thinking around how we wanted to launch this. And that is what go-to-market is. How are you going to take this product out into the market? But we had some very high-level ideas, which were that we would have a B2C approach, and this is how we would get our product in the hands of end users. And then we would also have a B2B approach where we would be selling our product to businesses. Investors in our case didn't mind too much that we hadn't done a lot of thinking on this because we were so early stage, but it was important to include this because it showed that we were aware of it and that we had at least done and acknowledged that more work needed to be done in this area. Okay, next is the business model, which is how are you going to make money? Basically, how are you going to exchange value or provide value and receive money in exchange for that? I think any kind of business model is very well represented with some kind of diagram or flowchart. So definitely try to do that. And that's what we try to do here. And of course, we had a brief description as well of how this diagram actually flows and works because it might not be easy to understand without an explanation. We had a couple of additional slides relating to the business model. We wanted to highlight what the current or immediate business model would be, which was through a licensing fee, which is what we had proposed here. But then we also showed that we had done thinking about the future business model. And this kind of goes to, again, what investors get excited about. Investors want to know that you are in this for the long haul, that you have plans beyond the immediate thing that you are trying to start, and you've thought about where this could grow, how this could grow, and how financials and business models and product capabilities can all support that growth in the future. And lastly, we have another diagram to represent why our business-to-business customer would be willing to pay us our licensing fee. And through this and we were using this diagram to show what monetary value our customer would actually receive and why they would be willing to pay us a licensing fee. This isn't going to make much sense because I haven't talked about the business or the product or what we were trying to do, but just a way to demonstrate that you can have a business model to show how money exchanges for the value you're providing, and then you can actually build on that to show future business models or think about different types of business models if that is relevant to you. And then thirdly, you can also show how that business model would be applied and how it would actually work for the customer that you are proposing that business model for. Okay, so this slide seems a little out of place now that I look at it, but we did have one other slide which was the value we would be providing for the end user. And this was put in the business model section because ultimately we were going to be paid for the value that we provided consumers. And so this was kind of our take on some of the benefits they would get from the product capabilities that we were providing. I think we could have put this in the product section as well, but it flowed on quite nicely from the value we were providing the business and the value that we were providing the end user. Now let's talk about competition. So we have two slides here. We have direct competition and indirect competition. And I think it is important to lay out as much detail as you can about competition. Do not be afraid and do not hide competition. Competition is a good thing. It is healthy. And it's better for you to acknowledge upfront if you do have competition, rather than someone coming to you and telling you that, hey, you've got this competition that wasn't mentioned in your investor deck. So we had quite a few competitors, as you can see. We decided to break them up into two different categories. You can do this in different ways. You can try and put them on an axis, which is very common. And the common way to do that is to show how everyone is solving similar parts of the two axes that you have. And then you're kind of the lone wolf and you're solving this problem that no one else is, but we just decided to do it in this way. And then we also had a way to represent the indirect competition that we had. So now this wasn't necessarily products that existed that were potentially going to threaten our go-to-market, but it was acknowledging that there were other players in the market. And as you can see, for us, that meant actually the companies that we were selling to, that they could actually end up building these products that we wanted to build themselves. Next, we have our key milestones and roadmap. So you don't necessarily need a slide like this, but for us, this was to demonstrate what have we done and what are we planning to do. And we wanted to show this because we were pre-product, so it's very important for us to show progress in a different way because we didn't have customers coming on board. We were, making quite slow progress with our development. So it was important for us to demonstrate in other ways, look at all the things that we have done. Now, this would typically be a traction slide, but because we were pre-product and we didn't have actually any paying customers, we decided to pivot this slide into talking about people who have trusted us. And you can get very creative with this. Traction isn't always in the form of customers or people paying you or using your product. You can demonstrate traction in different ways depending on what stage your business idea is at. And so for us, it was that we had received some investment from a venture capital firm. We had been accepted into actually 2 startup accelerator programs. We had been selected for an international conference where we had another chance to pitch to investors and showcase our product. And we had started scoping things out with a potential customer. Financial summary, I'm going to blur out these numbers because, to be honest, they were quite meaningless, and startup financials can often just be a finger in the air. But it is still important to put down something related to numbers, and that would typically be a 3-year forecast. Now, investors know that you really don't know what's going to happen in 3 years because the startup environment is so volatile. But it's important to do this to show, one, that you have made the attempt. And in doing that, you have made some assumptions. They'll want to understand what your assumptions are. It's important to be optimistic, but not unrealistic. And so you will have to kind of explain what your logic was for arriving at different numbers that you put together. So why you think you would have a certain number of customers, why you think your costs would only be increasing by a certain amount, why you think you would break even in year 3 if that's what you think. It's very important to go through this exercise, and again, it makes your entire deck complete, it makes it look more professional, and it also shows that you have the right financial skills to put something like this together and be thinking in that business savvy way. All right, next we have the investment slide. So ultimately, the reason you're probably sending this pitch deck to an investor is to ask them for money, and you need to tell them how much you want. Show them how much money you want and what you're going to use it for. It's also great if you can show other things you have in the lineup to raise money. That gives investors confidence. If you've already raised money, then put some logos on the screen to show who's already given you money. All of that can really boost the confidence an investor can have in you. Next 2 slides I have are the team. You have the founding team, which is you, your co-founder, your immediate team. and then you also have your advisory team. Both are incredibly important. It's important to represent yourself in the right way to make sure that you demonstrate why you have the credentials and experience and why you are the right person to be building this. But your advisory team is very, very important. It shows that other people have come on board with your idea, other people are willing to back you, and this again would give investors a lot of confidence. And that's pretty much it for the slide deck that helped me secure funding for my startup before we had even built a product. The point of this video is not to say you should raise money pre-product. The point of this video is to demonstrate how you can put together a really good, concise, but detailed investor deck. After my various startup experiences, I do not think I will ever want to raise money for a product that doesn't exist again. I think it creates extreme pressure for you as an early stage founder, as well as having to give away a lot of equity in the very early stages of your business. I would much rather bootstrap, use no-code tools, get money from family and friends before I look at the investment route. And I think investment for me would really be when I'm trying to scale the business. So yeah, just something to keep in mind, that this is something I needed to do at this point in time. It really depends on the business, it depends on your approach and your strategy, but for me, it's not something I'll probably be doing again. So anyway, if you did get this far, thank you so much for watching. I do hope this was useful, and I will see you in my next video. Bye.